Traders, how is everybody doing? Timo Wilson with Vision FX coming right back at you guys for a new week, a new fresh week of technical analysis as everybody has been waiting for. So I hope everyone had a prosperous and great week last week as far as trading. And like I promised you guys from the beginning, every single Sunday, sometimes Monday, I'll be catching up with you guys on the foreign exchange markets. So it is about 10:20 as far as the time is concerned over here on the West Coast. As some of you guys know, I'm located in Phoenix, Arizona, and I'm ready to do a recap from last week on the markets as far as Aussie versus the New Zealand dollar, Aussie versus the dollar, Euro versus the yen, and I'm going to add one more pair this week that I see some interesting things going on pound versus the Swiss franc. So let's get right back into it, guys. So here we are on Aussie versus the New Zealand dollar, and as you guys see, last week we had an extremely bullish week after the week before we closed as a doji. So here you have your morning star pattern, you have your bearish candle, you have your doji, and this is your confirmation candle right here to create this nice morning star pattern, which can give us hints that more bullish run and bullish legs are on the way. So we have to dive deeper by dropping down time frames. So we're definitely in the green zone, in the buy zone. Bulls are definitely taking over as covered the last 3 weeks. So let's drop down to the daily time frame. Now, on the daily time frame, another confirmation added to my analysis was the cross of my moving averages. And, as for right now, I'm going to keep it as basic and as clear as possible because I do know that I have some new traders watching my videos that I just don't want to confuse things for you guys. So as long as I keep it clear and as well as basic, it's going to be easy for you guys to start building your foundation around your own trading strategies, etc. But one thing I knew as a new trader is the most important and hardest part to be a professional Forex trader is dictating the direction of the markets. That's step one. You have to learn how to find the direction of the markets. So I've went over this the past couple weeks as 1.0500 served as our support zone, and we've been bullish for the last 1, 2, 3, 4, 5, 6, and we're going on 7 days, guys. Right off this bullish engulfment right here, as I called the week before. So on the daily time frame, we're looking extremely well. We do have to pay attention to this zone right here, guys. This zone right here serves as a nice resistance zone. As you see, a lot of wicks going through it, a lot of rejection from this zone. But as long as we break 1.0670 and hold on a higher time frame like the daily, I'm predicting definitely our first stop to be 1.075. Dropping down to the 4-hour time frame. So we had our first bullish leg up, MA crossover, and 1.0625 is now our support zone. 1.0625 is now a great support zone that I re-entered into the markets after taking some profit. I put more positions down here, which on the 4-hour time frame, as you see highlighted, this structure is our consolidation zone. So what tends to happen is you get traders in the market, and what they do is once they see reversal signs like this doji here, this nice spinning top here, and then confirmation here to short, you have a lot of traders in the markets that are impulse traders. And the first red candlestick or first Forex pattern they see in the market to short, impulsively they short the markets and get trapped because they don't put all the tools together for a proper technical strategy to buy or sell the markets. So once again, I'm not a trader that likes to go against the trend. I don't like picking tops and bottoms, but numerous strategies and confirmations line up for me to enter as well as exit the markets. So once again, guys, we're on a nice consolidation zone from 1.06257 and highs of last week being 1.0672. I'd like to see a 4-hour to daily candle break this zone, hold above, retest, and go for our next bullish run, completing 1.075 this week. As you see, the trend is extremely smooth on a 4-hour time frame. We did have a slight breakout of our trend line, which once again, we still had no confirmation to short this pair as we held above moving averages and formed a new level of support on higher time frames to go on ahead and continue another leg. Now, me personally, the Fibonacci tool is one of my favorite tools. So you could easily take your Fibonacci tool and take it from our lows of our first entry on this trade to our highs of last week and see our support zone is around the 38.2% Fibonacci level, and our extensions, especially the 161.8, is lining up right around where I'm predicting this pair to go. Now, Aussie versus the New Zealand dollar is not a popular pair that a lot of traders trade, but just a few years ago, I started playing around with this pair, got to learn it, its ins and outs, how it moves, when it breaks, in different sessions that volume is normally at a higher pace to enter and exit trades. And me and this pair, we just, got along. I've had a lot of great trades on Aussie versus the New Zealand dollar, and I plan to continue to. But let's see if we could hit 1.0750 this week. That would be awesome. So the first leg was 100 pips. We could go on ahead and start looking for another 100 pip trade targeting the upside this week. Okay. Now understand we do have some high impact news coming in for the Aussie as far as tomorrow. You could click on these different articles, see what they're about. I do keep fundamentals in mind when trading, but I'm not a fundamental trader. You have to know the difference. So anyways, so once again, nice support zone. I'm buying above this support zone, confirming my strategies that I plan to take for the next bullish leg to 1.0750. Moving along to Aussie versus the dollar weekly. Now, as you guys see, last week, our candlestick closed almost as an engulfing candlestick. We engulfed the week before, as well as the last 1, 2, 3 candles before that. So this can be a little bit tricky. You can look at the weekly time frame on Aussie versus the dollar. This might be a short trap. We still need more confirmation. Last week, I was telling you guys that I'm looking for longs on Aussie versus the US dollar, but a daily candle must hold above 0.800 in order for me to consider any trades long as far as Aussie versus the dollar. And as we see last week, it was heavily rejected, 0.800, which is a nice round psychological number that we have touched in the past and wicked and rejected. So there were no trades taken on Aussie versus the dollar. Let's go on ahead and drop down to a lower time frame. But before I do that, as you guys see, even on a weekly level, I have 1, 2, 3, 4, 5 going into 6 weeks of support at this level here. So this is an important zone. And when you zoom out on Aussie versus the dollar, as mentioned before, this is a bullish trend with highs, lower highs, higher highs, lower highs, higher highs. This could potentially be setting up for a lower high as we have a lot of rejection of 0.7650 on this pair. So let's drop down to the daily level. So as you guys see, 0.7750 did hold as a nice form of resistance as this pair consolidated for 1, 2, 3, 4, 5, 6, literally 6 days before rejecting 7,750 on a daily level and coming back down to our nice support zone. Okay. Now, with that being said, on the daily level, as you see, this support zone is extremely important as we still hold above this trend line. So this thing can really get tricky, okay? On the daily, I still see lower highs, lower highs, lower highs, but we don't have any lower lows around this zone. Now on the 4-hour time frame, looking at Aussie versus the dollar, this can be a little bit more clear for you guys. We might be forming just another bullish leg, but we still need a little bit more confirmation. But I do have, once again, a morning star pattern as we have the doji and the bullish engulfment here on a 4-hour time frame. But that's not just enough to take a trade, okay? So we still have to wait out on this one and see how price action reacts this week, especially with a few fundamental announcements, just to get a clear vision of the direction for the future. Now, catching up on euro versus the yen last week, guys. Last week, I stated that if we held above 1.33, that I would be looking for longs on euro versus the yen. But as you see, we closed just bearish on the weekly time frame, as we do hold right in between two of my moving averages. But my support zone of 132 on a daily time frame, we did consolidate, okay? So it's still thinking. This is what I call the thinking box right here. So let me go on ahead and highlight this structure for you guys. So we had a nice bullish break before last week started, and all week, all we did was dance around the support level, okay? So the markets can make traders do one of two things. Traders can, on 15 1-hour time frames, which really isn't my trading style, short the highs, buy the lows, as we're just trading in a sideways range right now. We are approaching a nice trend line, as I have my first higher low right here, and we're approaching this trend line now. Maybe price is just waiting for this confluent zone with a major support zone and a respected trend line before making the next bullish leg up, or we could potentially break. So dropping down to a 4-hour standpoint on this pair. Let me go on ahead and highlight our structure. So this week on euro versus the yen, guys, what I'll be looking for is I'm going to go on ahead and highlight this zone for us. This is what you call an either or trade, okay? As you see, 133 has been heavily respected on this pair, as it is a nice resistance level on a lower time frame, as this is our bearish leg, okay? But overall, we are on a bullish trend for weeks now, guys. So what I'll be looking for on this pair is on a daily time frame, or even a 4-hour time frame, depending on price action. This pair either is going to break, and then it has to use 132 as a heavily respected resistance zone. This will activate a short trade for me. Now, I'm not favoring shorts too much on the yen. So if price does what I think it's going to do, which is break our highs of last week of 133, use that as a heavily respected support zone, I'll definitely be targeting 134 on euro versus the yen. Now, the new pair for this week, as I was skimming through pairs, and the talk of the markets is how the GBP, the Great British Pound, has been bearish. Last week, we had a lot of bearish price action. So I do like pound versus the dollar. I do trade pound versus the yen. And every now and then, I'll take a look at pound versus the Swiss franc, guys. So looking at pound versus the Swiss franc on a weekly level, right? We have a high of almost one, you could say 1,550 range, psychological number that we have traded under since 2011. Okay, so you have your first point of contact here, your high of the structure. You have your first lower high here at 1.4570 range, and on a long-term structure basis on this pair, we're definitely still in a downtrend, guys. But we have to consider since 2016, we have been making nothing but higher highs and lower highs on a small bullish retracement on a longer time frame. So we can take this as far as here. So this is all bullish price action here as far as my outer trend line. And we can even form an inner trend line from this wick here to around here for an inner trend line on this pair. Oops. Delete that. All right. Now let's take an inside look on this pair. Now what intrigued me about this pair is though, even though for weeks now we've been on a nice bullish run, last week closed as a nice inverted hammer right here on this pair, signaling that we could see some downside this week. So taking a look, we wick close to 1.3850 highs of last week. Let's drop down to a daily time frame to get a little bit more insight. Now you have to be careful because once again, we're in a strong bullish trend, extremely strong bullish trend, that this could potentially just be a higher low. So on the daily time frame, what I do see is that around 1.3500 is a major area of support that was broken that just might need to be retested in order to continue this bull trend on a lower time frame. Okay, so this retracement of this inverted hammer from last week could definitely send us down to 1.3500 on a daily time frame, as I have a 3-pin pattern as well. You have 1 wick here, 2, 3 on a daily time frame. And we did close below one of my moving averages, which gives me just some reason to believe that shorts are coming as the pound has been weak across the board. So dropping down to our 4-hour time frame, which makes things just a little bit clearer for shorter term trades, so we're not swinging 2-3 weeks at a time just in one trade, which really isn't my trading style. I'm normally, a trader that will enter the markets and take profits in the matter of 2 to 3 days, and I try to keep my trades limited as far as how many trades I take in a week. Looking at the 4-hour time frame, guys, it shows me a lot. So at one point, this was a nice support level right here. This was a very nice support level at one time as we made a nice higher low. And obviously we have an evening star pattern here with a nice bearish engulfment that engulfed the last 1, 2, 3, 4, 5, 6, 7, 8 candlesticks. And our rule is 5 candles minimum, followed by a lower high where you have a spinning top and a 3-pin pattern. You have 1, 2, 3, a spinning top, followed by another bearish engulfment, breaking this whole consolidation range right here, which can signal further downside is headed this week, coinciding with our higher time frame analysis. Now, once again, this pair heavily rejected this zone for one entire day, which was Friday. So you have 4-hour candles, you have 1, 2, 3, 4, 5, and then rejected that zone. So you have a whole day worth of candles just consolidating around this zone. And it looks like we're just coming up to retested. I have my moving averages crossed to the downside. Now zooming out, guys, looking at the entire trend, I'll show you one signal other than price action that intrigued me about this pair once again. We have an inner trend line that, as we speak, is being respected, guys. So it broke, and as you see to the wick, As you see to the wick, we've retested this, and we can see further downside this week, guys. My long-term target for this pair is 1.35000, which is potentially 174 pips of where we currently trade. Now, what I'll be looking for to enter this trade is somewhat of a confluent zone of our new trend line forming downside. So I'd like to see somewhat of a swing up into this zone, somewhere over here, okay, with stops. I'm not going to really tell you where to put your stop loss. That's giving away a little bit too much, but I'll be looking at this zone to short, targeting 1.3500 this upcoming week. So definitely, let's see how our trades go. Once again, guys, pay attention to fundamentals. Depending on what pairs you're trading, you need to know when high impact news is coming out so you could kind of plan and strategize your trades around that. But I wish everybody has a successful week this week. Stay updated on my Instagram at TimoJoel, TimoJoell. Stay up to date. You know, I show my trades. I keep you guys updated with the trades I'm currently in, with what's going on. And let's just catch a lot of pips this week, guys. Other than that, I'll catch you guys later. Thank you for tuning in. Make sure to subscribe to my YouTube channel to stay up to date. Thank you.